Hello, everyone, and welcome to our episode of the WealthTech Insider. For those of you who are our regular listeners, you'll note that we've had a bit of a name change. We've gone from the game of fintech, to the WealthTech Insider. I am Danni Le Grande, and I'm joined by our very own Peter Warren today. And Pete, what's with the name change? Why did we do this?
I think it might have been my idea to
Might have
change
been.
the name
Mm-hmm.
because Nicole in our marketing team, she was playing around with podcast cover art and those sort of things. And I think I just looked at it and said, we really talk about wealth tech. We're not really fintech, because fintech, it's pretty broad, right? It's
Mm.
payments and
Mm.
banking and all sorts of things. And that's not us. And I just
No.
thought, why don't we just call it what it is, wealth tech?
Yeah.
And as for WealthTech Insider, was that a Chat GPT special? You came up with a
I
name.
think we might have done a little competition and used ChatGPT to come up with some ideas for us. So there we go, guys.
Gotta love
Something
a rebrand.
I'm going to
You know, the
check.
really cool thing, the one great thing about running our own business is I think we decided on that name change in about 25 minutes over a
Mm,
Slack channel discussion. There
mhm.
wasn't a committee. There wasn't a
No, we didn't.
focus group.
No, we didn't have lots of meetings to figure it all out and approve the
It
process.
just kind of happened.
All right,
Anyway,
let's hope it works and let's like it as much as we do.
yeah.
Cool. All right. So today we thought we would maybe go down another path with this podcast and talk about the news and talk about some of the things that have been going on in our industry. And I feel like, I don't know about you, but we've had so much going on this year. I feel like it's been quite a transformative year in our industry. You know, we
Mm.
have these years where we just kind of tick along and everything's, business as usual. But this year, I feel like so much has happened. We've had obviously the economic environment is,
Mm.
is in the news all the time, high interest rates, inflation, all that sort of thing. But in our space specifically, we've had new tech providers come to the market, which has been really great to see. We've had some overseas players come in as well. We've had AI now.
Mm.
AI is just moving at this really incredible pace. So and QAR, obviously, the regulatory environment now with these big changes that are hopefully coming down the pipe to make advice more efficient and affordable for all consumers and advice businesses, which is really good as well. So, all that's been happening. Do you agree?
Mm. Yeah, it's going to make the predictions interesting for next year
I know.
because I think a lot of this stuff's played out.
Mm.
But more to come is my sense with everything. A lot of people I talk to actually say, "Gee, it's really noisy at the moment," and it's obviously noisy if you look at the news all the time.
Yeah.
um, but but the amount of M&A has even surprised me.
Yeah.
Yeah,
On that.
particularly at the licensee practice level.
Yeah, lots of that happening. So let's talk about that. I think let's try and cover off some of those acquisitions that have been happening. So I wanted to talk to you first about Count's acquisition of Diverger. So Count acquired 100% of the shares of Diverger at I think $45.5 million. So obviously
Yeah, it hasn't happened yet. It's still a proposed deal, I think, still to close.
still in the wings. But post acquisition,
Yeah.
obviously, Count will become a really diversified financial services provider and obviously have significant increases in revenue from service functions, that sort of thing.
Yeah.
New services potentially for advisors that are moving underneath the licensees, investment options, all that sort of stuff as well. What do you think
Yep.
about that
Yep.
acquisition?
Definitely makes a lot of sense for Count and probably for Diverger as well, I would say. I'm not really thinking about shareholders here. I'm more thinking about, the people in the business and the customers, I suppose. There has been I think there's still a bit of a road to go to get the deal complete, as is always a story with public companies. There's a process that has to be followed through, but seems like they've got pretty strong shareholder support. And, this is definitely one of those deals that just makes complete sense box. Obviously, though, like with any M&A, it's really going to come down to what does life look like afterwards,
Mm-hmm.
and what does it mean for the consolidated business together, because it's going to become quite a broad business with lots of advisors. And we've seen lots of examples of this over the years, right, where M&A, a lot of the success really depends on what happens post deal. What's that combined proposition look like? How does the business absorb the greater numbers? But I think there was always going to be in that licensee space a couple of clear winners who were going to, and not so much winners, but logical big homes to go to, which are really filling that void that the banks have left, quite frankly. So you sort of get the sense that those Diverger, Centrepoint, Wealth Today, these sort of licenses are now, Fortnum, some news from yesterday. So these licensees are now pushing well over those 400 or 500 advisor numbers mark, are sort of becoming those established pillars that you go, yep, these are probably the businesses that are going to be the licensees, big licensees moving forward. But there's also explosive growth in the micro licensee space, right? So there was just a lot of economics that had to happen for this just makes economic sense because they weren't overly profitable businesses in their own right. I guess the really interesting one for the thing that intrigues me with the Count Diverger thing actually for me is that, Count have a really well-defined model around accounting and financial planning together. It's in their DNA. They're investing in underlying businesses, and so they're doing a lot of things that Diverger actually wanted to do. So I think this is why that one ticks the box for me so well, is that it's just really on the same track Diverger was on, quite frankly. And so it'll just become a much bigger business. And, I think though, like everything, it's easy to forget. You sort of go, yeah, these two businesses together makes a lot of sense. And the people and you go, yep. But we also forget there's a whole heap of small businesses underneath these licensees that are all independently run, self-employed people. They've all got their own ideas about where business is going to head. So I think that's always still going to be the challenge for the licensee sector to work through.
Yeah. And do you think, just talking about those smaller advice businesses that make up those licensees at the end of the day, really, we're going to have a technology focus, obviously. We're a tech consulting firm, but how do you think technology plays out in all of this? We sort of have seen in the past the merging of systems, the merging of technology, sometimes, or actually probably quite often, that becomes messy when you sort of get into the trenches of bringing technology bringing everybody under the one technology banner. So how do we think these licensees are going to sort of tackle those tech problems, given the fact that advisors also, now want to have a little bit more choice when it comes to technology? There's a lot of stuff out there that they want to have the flexibility to use. So what do we think?
Yeah, and we're biased, right? So we think we're the most important thing, technology. But I think it is the number one challenge because you're quite right. And we work with clients who've got multiple Xplan sites and multiple configuration, and it's a real challenge trying to figure out what's the right way forward. Data quality varies from practice to practice, and these are not new businesses. These are long-running businesses with a lot of legacy, a lot of data, a lot of complexity. And so there's a double whammy here. There's the messiness that happens at the practice level, which they have had their own M&A trajectories and their own things happening. And then there's the messiness that kind of happens at that licensee level. So you sort of, you sort of expand it out and go, wow, there's a lot of complexity here from a technology point of view. It's further compounded by the fact that, a lot of these businesses are using Xplan, right? And so everyone has, a lot of cases, has an individual version of Xplan that they're using, all configured differently with different integrations and different things happening. So, boy, I think this is the number one technology challenge for the sector, because if you sort of go back to the old model, you sort of remember when the banks were running advice businesses, well, they would generally just have one Xplan site for a licensee, and that would be it. And you had to use that because it was sort of paid for, it was part of your thing. But because of the land grab that's been going on across a bunch of licensees and a lot of advisor movement, either advisors haven't been willing or just haven't been able to change their software to meet, to go to what the new licensee is using. And so they've stuck with what they've had or been given that choice. But then that's caused complexity. So, frankly, I think this is going to keep us busy for a few years. It's just working out what is the right model. And, if I was a licensee at the moment, you really are trying to walk a fine line between offering that operational flexibility, which you said quite rightly, Danny, that businesses want to have. But at some point, there's got to be some consistency, because otherwise licensees just can't provide services efficiently.
How are
through
you
the
going
practices.
to
This is
provide
where
the oversight? Yeah, it's
yeah,
difficult.
this is where the rub's going to be.
Mm,
Yeah, yeah. So I think I look at all the deals playing out at the moment. So what's the list? It's like, yeah. So Count and Diverger, Fortnum yesterday are acquiring Strain Unity. Centrepoint is now buying underlying businesses. In Focus is now buying some stuff. And we're also aware of another 3 or 4 pretty large licensees that are up for sale, right?
Yeah.
So there's more to come
Yeah.
next month. So there is absolutely going to be some big technology decisions that have to be made. And I think, the challenge for advisors is going to be, there's just going to have to be some compromises. If you want to be part of a large licensee, you're going to have to accept their way of doing things. And we've been on this journey before, right? I think. I was running my dad. Well, my dad used to run mine at 10 stores before he sort of, and when you run a franchise, you get the paint from the supplier they tell you to. You do things the way they tell you to because there's efficiencies and economies of scale. Kind of get the feeling that's why it's got to head for technology.
Yeah.
Licensees.
And I always think too, maybe from a practical perspective, there is no magic bullet. There is no wonder tech stack out there. And we probably really need to be aware of that. And I think also, for advice businesses, sometimes we may, if we are in that situation where we are limited with choice because we're with the licensees options, then, that's not such a bad thing. Maybe we can revisit our processes and maybe we can sort of massage things in a different way to then fit into what the licensee is offering, because it's pros and cons, right? You are getting those advantages from being with a licensee, and it's okay to sort of shift those processes, and we probably should take that into account rather than sort of trying to get everybody to change for us individually. We could potentially be thinking of different ways to do things.
There's one other angle to this, is probably impacts the technology companies themselves, so the providers of CRMs and advice software, in the sense that, in their defense, they've probably done a lot of things over the years to please the licensee and not so much the practice around the way they've configured their technology. Frankly, even commercially, the way they've charged, which has probably not served them well, in my opinion, because they've had to discount heavily and they're now wearing the consequence of that. So maybe there has to be a bit of some evolved thinking in how software companies serve licensees and how they serve the practices underneath that, and get that balance right commercially.
Yep. Not an easy problem to,
because there's an economic challenge here, right? In the sense, there's 12,000 advisors. Software is super expensive to build and maintain, and I always, someone's got to pay, right? At the end of the day for this stuff. So, I think a lot of the next 2 years are going to be really focused on that. And for me, either the software companies and or the licensees are going to have to lean into that a little bit and make some trade-offs they are willing to do or not willing to do. In the same way that, a lot of large practices just simply say, you know what, I'm going to procure my technology directly and I'm going to wear all the costs and complexity to go with that, because that's a trade-off I'm willing to make. I think something has to change in that regard. And that's just not about CRM, Danny. It's about client portal, cyber, hosting, like Microsoft 365 infrastructure hosting, you name it. There's going to be a lot of things that get sorted out. Yeah.
And not to mention configuring those products as well, those technology applications that you're using too, if you want to get the most out of them.
Absolutely.
Yeah.
And I think QAR is going to really throw a spanner in the works in all of that, because a lot of processes are going to change potentially.
We are going to have to revisit that.
Who's going to pay for that? Who's going to do that work? Who's going to pay for it? That's what's rattling around my brain at the moment.
All right. Now moving on to, and you have mentioned this, the next acquisition is Australian Unity's financial advice business being acquired by Fortnum Private Wealth. So the key points here is the acquisition includes, I think, 18 advisors and corporate superannuation services. Obviously, the focus again is on expanding that financial advice accessibility. The emphasis is on scale, synergy, cultural alignment, that sort of thing. What do you think about this acquisition? It's in the wings.
Oh yeah, another one that makes sense. I think Australian Uni would probably, I not across it too much, but I think they would, if it's not core to their business advice, then it's right to partner and work with someone who it is. So, and Australian Ute is such a trusted brand, and no doubt there'll be an ongoing commercial relationship there with Fortnum. I think that's a real win for Fortnum advisors. Potentially, there could be good, lead generation opportunity and all those things. So, I think we might see this with superannuation funds and other product providers. I think there's a real win here for licensees to strike really good commercial partnerships with those businesses that were in advice historically, and now they're out of it, but they want to maintain some relationship with those advice providers. And again, they're probably more likely to do that with the more established, resourced licensees than smaller ones, frankly. So it probably makes sense. Yeah.
Yeah. Agreed. All right. And then Centrepoint Alliance's acquisition of Financial Advice Matters Group. So again, I believe Financial Advice Matters operates 9 offices, and they have quite a significant client base as well. So this obviously aligns with Centrepoint's growth and expansion strategies, and there's an expected boost to the revenue and the advisor team as well. This is a positive one as well.
Yeah, so salary advice channels are actually quite rare these days, right? Because the banks don't do it anymore. So it's really just super fun. So not surprised to see a licensee, try to be in that salary advice model. I always think about, Shadforce and what a successful business that's been for IWF. And I'd say some of the licensees be looking to emulate that. Probably gives a licensee a reason or an ability to incubate younger advisors and give them a home, so because that's the thing that also puzzles me, or we're just lacking in this industry at the moment, is where are the incubators for future advisors? So we've got to create these models. So yeah, I'm all for this, because I just think there's just some advisors who are not ready to be business owners and would actually do better in a salaried model, at least to learn their craft. So yeah, but again, it does show potentially diversity in the thinking around, and licensees are going to be really thoughtful of, from a technology perspective, of how they provide their services into multiple channels and how do they again get consistency across that. So good luck to them. Yeah,
I think you're right too. That's a really good point about the incubator models. Do you remember the Horizons, AMP Horizons back in the older days? So that was a really good incubator model for incoming advisors, and you're right, we really do lack that now. We really need it more than ever, right? We need to grow our advisor numbers. So let's hope that
IWF had one as well. They had an academy which was really well regarded. All the banks kind of had pretty robust training models to get new advisors into the market. So yeah, it's a huge challenge. So yeah, I think it's only a matter of time before these businesses set up these. And the other issue too is, if you're a licensee and you have books of business that are potentially on the market, you obviously want them to go within your network. You want to keep it within the family. So and there'll be probably advisors in those salaried models who will eventually want to become business owners and them in their own right. So they're obviously more likely to do that within your network if you help them through that process. So I think it makes good long-term strategic sense, but maybe without repeating some of the mistakes of the past about how you help how you get those people into those businesses and how you look after them.
Yes, exactly. Sure. All right, final one for today, although I suspect we're going to be having some more podcasts about acquisitions in the future, but Elixir Consulting and VBP, Virtual Business Partners. So Virtual Business Partners, outsourcing company based in the Philippines, has a really good reputation, used by a lot of advice businesses in Australia for paraplanning and client service admin work, and Elixir, who is a really well-regarded business consulting firm as well. So this was an interesting one for me, this merger. What do you make of this one?
Yeah, I mean, I'm probably a little biased because I visited the guys at, they're now called Vital Business Partners. They've rebranded last week, I think, so I should clarify that. So still VBP for short, but I visited them in May and went to the Philippines and saw what they did, and I was super impressed by what they've built over there, it's actually quite a remarkable story for our industry, how that business has grown from something so small to what it is today. I think this is in some ways it sort of feels a lot like what, like a lot of people in our industry are trying to do. They're trying to expand their offering, expand their services that they're providing to their clients, because they know that if they keep doing the same thing, that model will eventually run its course. And I think VBP Dave, their CEO, has been really leading with his chin quite a lot, saying, you know what, AI is going to impact our business model in the future, which it will. We need to be thinking more broadly about the services we provide. I think, there probably is some question marks there around you're an outsourcing business at heart. How does a consulting business come into that model? And, in the same way that if Finura was trying to get into another business thing, we'd be probably going, hey, gee, how do we do that? Is that in our DNA? But I think, providing that that team, that really good team at Elixir can stay, and, it's a people business consulting, right? Anyone tell you that?
Yeah.
Then it's probably nice for them to have a home, and, Sue and the team have a wonderful reputation. So it probably gives them a bit of certainty, which is great. And it does, for me, it does pose a real question, like, probably back to the initial conversation, all this M&A, there's almost this new layer of infrastructure being created across the industry and service providers who maybe weren't the main conversation 3 or 4 years ago, but now they are. So I think there's going to be a lot more of these sort of deals, because there's also a change in the guard generationally happening. There's a lot of business owners now looking to either retire or start on that trajectory, who have been in this industry a long time. And, I don't blame them for being tired at this point and wanting that next step. So part of these things is also driven by the needs of the business owners. So, yeah, I wouldn't be surprised to see more of those industry service providers starting to look for homes in the foreseeable future. And they're obviously going to be probably those big licensees we discussed earlier, and some of the and service providers like VBP that have capital and scale. VBP obviously got some good capital injection through its partnerships with AZ NGA and InvestBlue recently, so they probably have an appetite for growth now. So, yeah, there's a bit of a land grab happening at the moment, right?
I really like that. I actually really like that sort of that marriage with Elixir and VBP. It does sort of make sense, because advice businesses are obviously looking for that strategic business guidance, of course, but also, they need that the engine room to continue to function, and the day-to-day to happen, and VBP complements that. So, yeah, I watch with interest. I really like that one.
I mean, it's so hard, even with what you do in your day job at Finura. Like, so many times people call us, and they claim to have a technology problem, but they've often got, there's just other problems, like their people or process or business model or something, that's not a tech challenge. But because the technology can't defend itself, people blame it.
Yes.
It's like a pet in the house. It's easy to blame the thing that can't defend itself.
Yeah.
Although people love their pets a lot more than their technology. So I sort of, I think any service provider who, particularly back office outsourcing, that deals with you're almost the end of the chain. I think anything you can do to make your client's world a bit better up front will improve the service experience out of sight. Because the one takeaway I had from visiting the Philippines was those outsourced staff who you hire in the Philippines for you, they just inherit all your tech, all your processes. So their productivity, the outcome you get from them, is only as good as the tools you provide them.
Yeah. And
that for me is this thing to solve. And so I think this is a step for VBP to sort of start leaning into that a little bit more, which makes sense. Yeah, for sure.
Excellent.
The only other M&A I wanted to talk about, which I don't know if it was on our list or not, but in the AFR the other day, Open Invest are seeking a strategic acquirer, which we did have on our predictions this year. So that will be interesting to see that play out. Open Invest definitely being more in the robo investing category, but probably similar to, but they're unlike Six Park, I think they're clearly got enough sort of traction and customers that they're probably at a stage where it's ready for someone to take it on to the next level rather than, hey, do we just, move on from this? So, so they've been they're going quite public with their desire for a long-term capital partner. I think we've seen this in the US, particularly where these robo startups have all found themselves being acquired by institutional owners with the balance sheets to own these things. So I'll be really fascinated to see who ends up acquiring that here in Australia, who it's going to be.
Yeah.
Yeah,
that's an
Who do you think? Do you think there's a natural owner for that sort of business?
I'm not sure. I don't know. Let me think about that for our predictions. I don't know yet, but I think it's a really interesting space. Obviously with QAR, the most recent news on QAR is that we're not looking at the SOA in this first tranche of consultation and legislative consultations that are going on. So, but obviously the aim is we want to reach more consumers. The whole point of all of this regulatory discussion is for that very reason. And I think Open Invest certainly sort of can attack that space really well. So
definitely,
it'll be interesting to see who picks them up.
Yeah.
Do you have any predictions?
I think, look, my gut tells me it'll be an asset manager or a platform for obvious reasons. And look, the owner will be, I feel they'll fit in two categories. There'll be the one where there's just an economic interest, where they go, you know what, that's a really good distribution tool for our managed funds that we're trying to distribute to either through advisors or to direct investors. The other acquirer would be someone who maybe looks at something Open Invest have actually built, their processes, their IP, around their delivery model, and go, you know what, we were thinking of building that. That's really cool. And at least we pick up, 20 odd clients as part of the transaction. So I feel like they'll fit into both camps.
Do you mean like a tech provider there? Are you talking about a tech provider acquiring?
Tech or platform?
Yeah.
Tech or platform. So, it may not be like a retail platform like a Hub or an Airwell. There could be like an FNZ potentially. Could be a dark horse in a thing like this who has some desire to offer that capability to its other hundreds of customers globally, and there's just some jewel in the crown there around the tech that they really like. So that would be my if I had to make a prediction, that would probably be my one right now.
Gonna bet on that one.
Yeah.
All right. Okay, so key takeaways. We always like to give some key takeaways for advisors. Probably a little bit tricky given it's broad news that's going on at the moment. But again, we'll always suggest sticking to staying in your lane for now, making sure that your foundational tech stack is you're addressing that, you're addressing your underlying processes. If you are sort of absorbed or if you are part of these acquisitions as well, if you're a business that's involved in all of this, you want to make sure that those foundational things are really right out there as well. Any tips from you?
Yeah, I think for licensees that are impacted by all this change, I mean, obviously, when these things happen, it always throws up questions, gee, what are we doing? And we don't know this new owner and all those things. But I think treat it almost like you were finding a new licensee and ask them really detailed questions about what is their plan for technology, what is their plan to and just ask those questions thoughtfully and be quite rational about it, and know that you'd be going through similar processes probably no matter where you were at the moment. You'd be going through some change either way. I think the big question that if I was an advisor with a major licensee at the moment, I'd be asking about is, how are you going to support me from a technology perspective through QAR? What does it mean for me? Where are the guidelines? Where are the non-negotiables from a technology perspective? And where am I going to have flexibility?
Yeah.
Because I think there's going to be a lot of variability in how people produce and deliver advice in the future. And that's something we've got to work through as a sector.
Yeah, absolutely. And I think to do that, you need to analyze your own internal people capability when it comes to technology and managing technology and all that sort of stuff, and see where your licensee could potentially support from there. Yeah, good points.
100%. Yeah. Because it's pretty expensive to do it all yourself.
That's right.
We know.
Sure it is. All right. Thanks for listening to another game of the WealthTech Insider. If you haven't already, you can take our technology health check. You can find that at www.frenerogroup.com. And we look forward to catching up with you on our next podcast.